about to go live. Wow. I have a zoo here. Good luck with this episode. It's going to be au naturel, I'll tell you that. Ladies and gentlemen, welcome to episode number 43 of Rein It In, and this is going to be an exciting show. We're going to cover topics such as unemployment, condos, and why I hate condos. Yes, I'm saying it publicly right here. I'm going to dig into why I hate condos, listings and how listings are way up and why. And then we're going to talk about the Bank of Canada, and we're going to have a good old-fashioned Patrick prediction on where the rates are going. And we're going to finish this show with an exciting topic of politics. I'm going to serve up some red meat for Patrick and talk about how politics is going to impact real estate going forward in the next 12, 13, 14, 15, 16 plus months. It's going to be exciting. Patrick, let's get into the show.
JG, we will cover a lot of ground, but first, always, I'm just encouraging you, like, subscribe, comment, hit the bell, hit the notification so you receive other great content just like this. And then you know when we're putting it out there, like and subscribe.
All right, Patrick, let's get into the show. Where do we want to start? So much to talk about, I'm sure, and I have no doubt you're going to talk about Alberta, but please don't start with Alberta. Start somewhere else, would you?
Listen, I can talk about Alberta all day long, but there's so much to talk about. But let's start with a fundamental that we're starting to see and hear a lot about, which is rising unemployment. And it's an interesting topic because, we've talked about this in the past about unemployment. What does 5.2 mean versus 6.5? But listen, we are peaking at 8%, 7.8%, depending on what province you're in, what city. The point is this, is we're starting to see unemployment rise.
I want a job, I want a job, I want a good job, I want a job, I want a job that pays.
Now, something to be said about that is that there's a couple of things, not the least of which, and let me just grab a chart here. I'll show you a chart that we got to talk about, the employment and population gap. So here's what's happening is that unemployment appears to be rising. Yes, you got an average of 6.7. That's a big jump from 5.2 JG. But when you look at the population growth, 8.4% in this particular chart. My point is this. We got a bunch of people coming into this country with the promise of jobs who don't have jobs to go to. So in other words, now, of course, when that's going to skew the unemployment number.
So can I just get this straight, Patrick? So what you're saying is they're saying employment, it went from 5.2 to 6.7, got it. But population in that same time has grown by 8.4%.
Yes.
So unemployment rate is worse than it looks. Is that what you're saying?
Well, the unemployment rate is, you have to look at it and go, yeah, relative to the fact that we've got all this immigration coming in. We've talked about many times, you and I are both a fan of immigration. We need that immigration. But I compare it, metaphorically, if you take a glass and you fill it full of water, that glass will only hold so much water. And then you keep pouring water into it and it pours out the side. Think of this country as that glass, and we keep pouring people into the country. And while now it's overflowing, there is not enough jobs to accommodate it. And by the way, when you look at another chart, which is around insolvencies, we start to see that both consumer and business insolvencies are growing. My point is this. By far, it's the business insolvencies that are going up more than consumer. And consumer may catch up, but future state. In this particular chart, this is a combination of consumer and business insolvencies. The point is that businesses are not hiring. And aside from the fact that some are going into insolvency, got it. But it was also an indication that in order to avoid insolvency, people or businesses are cutting back and or they're not hiring. So there isn't as many jobs. So you start to understand that the unemployment number going up is in fact a flag, but it's driven by the fact that there's just not enough jobs to go around. The economy is not growing, but it's not collapsing yet.
I think I'll tell you a couple things from my perspective, my kind of in the trenches, what I'm seeing. First and foremost, if you are on the business side, which I am, Patrick, I know you are, right, as a business owner, I just had some interviews this morning. It's funny, over lunch, I actually had some conversation with my managers about some of the interviews we're having. And man, some great talent out there. and we're not struggling to find talent like we were 2 years ago, where it was a struggle to find good talent. I mean, now we're finding great talent for a really good price. So that, from a business owner's perspective, that's fantastic. And I think you're seeing a lot of this. So from a real estate investor's perspective, one of the things we're seeing is we've seen the budget of some of these projects we're doing actually come down. In some cases, 5%, 10%, 15%, where something we could have achieved for, say, 100 grand 2 years ago, we're now getting that same job done for 80 grand, 85 grand, 87 grand. So there is some savings there to be had for real estate investors. And that is, that's a good thing in this economy because it keeps things moving. But there's no doubt, Patrick, that there are some people out there that are looking for a job, not finding a job, because there's a lot of opportunities. That I also think, and I don't know if you're feeling this, I think a lot of business owners have done two things. One, they've said,
I'm just going to pause and wait to see what happens with this economy before I hire more people.
And number two is some of the technology that's been hitting the market, like AI, the Chat GPT kind of the world, like that whole industry. I don't know about you, but I am pushing to implement that first before I go hire someone else. And, it's not a perfect solution, but it's definitely allowing me in many businesses to push the can down the road on hiring if I can. I'm just instead of hiring today, I'm saying, let's put in some of this technology, invest in some of this, and we'll see in 3-4 months if we still need somebody. And in some cases, we're saying, you know what? No, we don't need somebody. We can handle the additional workload with technology. So I'm seeing that on my side too.
Yeah, I think that, this indication around unemployment rate, we have to pay attention to it. And I want to make sure that I don't think that, I don't want anybody to think that I'm negating the fact that it is a rising unemployment rate. The reality of it is that we have people coming into the country that aren't working. There's lots of controversy around all of that, by the way. And the point is that what we really are seeing overall is the now lag, I would say, kind of finally hitting. We're going to see the breakdown in many sectors of our economy in many provinces. We're starting to see in the real estate world, for example, arguably the term could be used, meltdown of the Toronto condo market. They're at record listings. They're at record lows in terms of sales. Prices are coming off dramatically. And this is just the literal tip of the start of what's going to happen in that particular market. The reason it's important for investors to know is that, neither you or I, Rain, we've never been big, strong proponents of condo speculating, and depending on what you were doing and how you were buying a particular pre-construction, it worked as long as it worked. The point is that we're going to see a lot of headlines in that regard. Builders are not building, developers are not developing. That means that jobs are going to start to come off even more in that particular world. Economically, we're going to get hit, JG. This question of, are we in a recession or not in a recession? It's going to become very, very clear by the end of 2024 that we are in fact in a recession. That's how I'm seeing it unfold right now. And when we look at the fact that our productivity is at record all-time lows, we've talked about that to nauseum, about our lack of productivity and how much of our economy is driven by immigration and driven by housing. And guess what? The housing component of it is, coming off the rails in many sectors, and it's big enough sectors within the real estate to actually have a meaningful impact on our economy.
So, number one, you're all doom and gloom here today, Patrick. I'm gonna have to cheer you up some way, somehow. Gosh, it's a lot of doom and gloom here, dude. Let's get on a different page. Let's turn the page. Let's take a page from Metallica and turn the page. Let's talk about rate prediction. I want to get a Patrick prediction right here, right now. What are they going to do with interest rates? There's a decision coming up, I think, in a couple of weeks. I think it's July 25th or something like that.
Yeah, end of July, somewhere around there.
Yeah. So what are they going to do? I mean, if you're seeing this, they're kind of seeing this, and that means you're probably in for another cut. Are you going in for another cut?
Well, I think that another cut would be in order. who is anyone? Who am I? Who is anyone to kind of try and second guess what the Bank of Canada will do and how they see the world? But I would say that if they should be taking at least a quarter cut in July. I'm not sure they will. I still believe that they think it's got to be more pain. I think we talked about it in the last show, is that the Bank of Canada doesn't control inflation. They do, however, control demand. And there's a couple things that are starting to happen around this interest rate, but we'll get to that in a minute. So what's my call? My call is a quarter point reduction.
I'm going on a half-point reduction. I think they're going to get ahead of it, Patrick. I think these people are brilliant, and I think they're going to get ahead of it. You watch. They know what's coming. They're going ahead of it. They're going half-point cut in July.
Yeah. Okay. Well, good luck with that. And if you're right, that's great. I just don't think they will. And there's a fundamental here, JG. And you're talking about doom and gloom. Listen, it's not doom and gloom. Here's the fundamental. If we as leaders or as guides in the world of supporting our real estate community and making decisions, we have to look at what is real, what it is that we have to pay attention to. Now, I never said that, run and hide, curl up in the fetal position and do nothing. This is, again, we've said it many times. As a matter of fact, when we spoke at the Expand event to a room full of investors, we pointed out that through this uncertainty is where opportunities show up. And that as investors, if we remain savvy, educated, connected, this is going to present amazing buying opportunities in the asset class called real estate, but in property types that make sense. Condos will not make sense.
So, Patrick, I think you're right. Let's talk about condos. But before I get there, you just identified to me the meat and potatoes of the opportunity in this kind of market. I just went to go look at a property like a couple days ago, last Thursday, I believe it was. Beautiful.
Oh my God, I have died and gone to real estate heaven.
I mean, literally like a gem of a property that these things never typically come on the market. It's on the open market. I had a meeting with the seller. He's totally open to all kinds of different opportunities. He's open to vendor takebacks. He's open to negotiating the price. He's open to the terms. All these things are a possibility. And it's a property that 2 years ago would have never hit the market. It would have traded hands internally, off market. That is the opportunity. And I think that investors, and I've been saying this till I'm blue in the face, but I got to say it one more time, just in case somebody's listening to this particular video, which is you don't get this chance all the time. And I said that at the Expand event, Patrick. You remember I said, you don't get this chance always to put in offers, play with the price, play with the terms, have a discussion about a vendor takeback. Most of the time, you're not in this position as a buyer of real estate. You're most of the time in multiple offers. You're fighting to, you have really tight conditions. You have to scramble. You have to scratch. It's way more difficult in many different ways. Right now, it's a great opportunity, especially, and I know people are going to be shocked by this, especially for new investors. Because the pressure is off. You can try, you can taste, you can test, you can do different things. That opportunity will go away very, very soon, in my opinion. So this is a great market for that. One of the reasons this is a great market for people.
It is. And all it takes is some education and some support. I mean, that's what the Real Estate Investment Network has been doing for 30 years. And we sound like a broken record and we sound like it's self-serving. And while we're in the business of supporting real estate investors, we believe strongly that this is, in fact, the opportunity. Get educated, get supported, take advantage of a market that's upside down. This is the time to start engaging in a market. But that's tough to do because people are scared. And I was just speaking with a really large multifamily brokerage yesterday, and he said it's interesting about how busy the brokerage is around selling apartment style multifamily units because partners want out, families want out, everybody's kind of thinking in fearful terms, and so that brokerage is very busy. And he said it's not turning over fast. Like it's not like there's a lot of buyers out there, so it's just an interesting time.
But Patrick, I want to get to condos, but before we get there, you're just bringing up some great points. Like, remember in February of 2022, like I wish I could go back there. You and I were on this very show telling people, guys, like we can feel the froth in the market. Like we can feel that everyone is going in multiple offers. They're going way too aggressive. Properties are not worth X number of dollars. People are offering X plus Y. And you just know it, right? You just know that there's just a bunch of froth in the market. We were telling people, be careful. We can feel it. We're at the top of this market. There's just way too much enthusiasm for this. I don't know about you, Patrick, because you and I, we see the world a little different sometimes, but I'm feeling the exact opposite right now, which is we're pretty damn close to the bottom of this thing because there's so much pessimism on the market. That's when you know you're getting close to the bottom, when it just keeps getting, in people's eyes, worse and worse and worse. To me, we're getting pretty damn close to the bottom.
Well, this goes back to, again, when you look at the froth, those are emotional driven decisions versus data driven decisions. So to your point about what's going on today, what's interesting, and depending on what market you look at and what property type, I've said a number of times now, and for the record, when you look at detached housing units, and that could be single family, duplex, triplex, anything up to that multifamily fiveplex, those are becoming rare property types. And so there's not a lot of them coming on the market. They're not actually being built in spite of the government, commitment to save us. They're not being built, and that is not ever going to catch up to what we need to provide for housing. So I'll just, again, focus on that, that particular property type. I want to switch over to condos because, just your comment on condos, this is so important to understand, is that property types matter, geographic region matters, and it matters more than ever where those opportunities show up. So right now I'm just looking at the numbers. The condo supply in Ontario is what they would call literally off the charts. So in June, condo supply hit a new 14-year high of 6.6 months. Okay, so just take that in. That's a 1,220% increase from the low in January of 2022. Quote unquote, investors are getting destroyed. So all of a sudden, boom, we see this big spike in condo. And here's the thing about it, JG, there's still condos that are coming online, new stuff that's coming to completion. So all to say this market, that condo market, Toronto specifically, some GTA, is getting hammered, it's getting crushed, and it's only just started. That'll drive a lot of headlines. What investors have to know, aside from crap, I shouldn't have invested in a condo, is single family is still a great opportunity, as in detached.
I've always shied away, Patrick, from saying the words "I hate condos," but I've always shied away because I know there's just condos are. And the reason I've never said it publicly is because that's how I feel, by the way. But the reason I've never said it publicly is it's a low entry point for a lot of investors, and a lot of investors start in condos and then they move on to bigger and better things. And I think it's great as a stepping stone, but people have to understand kind of what they're getting with condos. And the reason I don't like condos personally as an investor, not as a consumer, I would love to, and I one day will have a condo in some city where I can go live, and that's great. But as a revenue driving asset, the thing I don't like about condos is a couple different factors. First and foremost is I said at the Expand event, you and I on stage, I said real estate is really a game of risk, controlling your risk. And that's what I don't like about condos. You can't control your risk with condos. You are controlled by a board. The board makes all these decisions for you. I had someone reach out to me the other day and say, I'm totally underwater, big time underwater on these two condos. What can I do? And I was like, oh, well, you should look at a different tenant profile. If you're trying to rent it for this, maybe you should consider different profiles. Like, oh no, the board won't let me do that. I'm like, oh, okay, well, that kind of sucks. Oh, the board won't let me do short-term rentals. Oh, the board won't let me do student rental. Oh, the board won't. Okay, so the fact that the board makes such critical decisions that have an impact on me, and they can't decide just for me, they got to decide for everybody. I hate that. That's the first thing. Second thing, I can't drive the revenue of my property. I can't intensify it. I can't add more units. I can't rent I can't build a coach home at the back and rent that separately. I can't make it a duplex or a triplex. I just can't drive more revenue out of it. It is what it is. And that's, again, a very bad thing for me in my world. The other thing is the real estate is based, the price of real estate is based on supply and demand. And condos inherently, by the structure of these buildings, they come on the market not one or two at a time, but 1 or 2 or 300 or 1 or 2 or 3,000 at a time, which means the swings in condos is up and down and up and down. That's just a function of supply and demand. And I hate that about that too. So for that, I'm going on the record. I hate condos.
Well, the thing about it is that I think, ultimately it goes back to strategy. So, what you talked about is that within your strategy, it didn't make sense and you couldn't see it. I think for me, around the condo market and having had the experience many years ago, I learned some important lessons. And that was the experience I had in Edmonton, by the way. So the point of it around this is that it was a point of entry for many, but it was also a bit of it was literally a wave of people getting rich in that condo market. In other words, low interest, low point of entry, dollars and cents wise. Everything was flipping and selling. Nobody had to qualify for a mortgage. So it was a kind of a get rich thought process, easy money that everybody dived into. But I mean, ultimately, the risk is always the gamble that everybody was playing with is the shift from ultra low interest rates to what we would call high interest rates today. Others might call them moderate. But the point is that it was always a bit of a gamble, thinking that, if this changes and the timing doesn't work, because you really are in that market, you were really playing on the timing of the market. That's from my point of view, and the risk is always there.
Well, absolutely. Timing the market's never usually a good strategy. And I do want to say, Patrick, there are some good condo, there are some better condo plays. Like there are some great condo builders out there. The location is very, very important. There's there are cool programs like the rental pool programs for condos that reduces risk. That makes a lot of sense. So there are some cool things about it. But man, there's a lot of risk in that market. And I think that if anybody's getting into condos, they should also look at okay, how can I step up and out of condos as well? Like maybe you buy 1 or 2 condos as investment, but you don't buy 10 or 20 of them as investment. You know what I mean, Patrick? Like diversify out of that asset type into something maybe a little bit different is also another kind of word to the wise.
Yeah, 100%. Okay, let's move on. So when we look outside of the condo market and just get into the overarching or the overall real estate market, we look at British Columbia, Alberta. It doesn't really matter where we go across Canada. What's interesting about it is that we're seeing an increase in listings, significant increase in listings, really right across the board. There is few cities or provinces that isn't seeing an increase in listings, including British Columbia, by the way. And what's interesting about all of that is that there's a lot of listings out there, so there's a lot of sellers, and there's not too many buyers. And I think the reason there's not too many buyers is, JG, prices aren't off. As a matter of fact, when you look, Halifax is down a little bit, and if I'll just show this chart here, you start to see is that Vancouver is flat. Canada overall is down like less than 1% on a national average, not that we care about it. But when you look across the board, Hamilton, we look at London, Ottawa, they're up. So call it basically flat. I mean, they're up 1% kind of thing. But the point is that prices have not come off like many are anticipating, short of what's happening in the condo market in Toronto / the GTA. Everything else is kind of holding its own. Downtown Vancouver, the condo market is softening a little bit, but ultimately prices aren't off yet. Any thoughts on that?
I've said from the get-go, there's a floor to how low the prices will go here. And that's been tested many times over the last 6 months. And this is just another one of those tests, Patrick. And you're absolutely right. And in fact, this chart, which these kinds of charts, you and I are not huge fans of them. And the reason is because they account for all property types. But if you dug into this chart and you looked at, for example, the price of single family duplexes or triplexes, they would be up significantly because those revenue generating assets are actually worth more. The reason is because when you can use that income to qualify, like in the self-funding house initiative that you guys are doing, Patrick, which I'm sure we'll talk about at some point, that revenue counts towards affording a property. As a result, there's a premium to those properties, and we're seeing those properties appreciate in price. So if somebody's sitting there thinking, oh, I can't wait for that triplex to go down in price, I think you're going to be waiting a very long time, and I think you're going to be kicking yourself in the ass very soon, because you're going to say, shoot, I missed my chance. Interest rates are on the way back down because they're going to do a half-point drop here later this month, as I predicted. Patrick, half-point drop is what my prediction is on the Bank of Canada. And I think that is what's going to spur the market. I think that's why, my personal opinion is, there's a ton of pent-up demand in this market, and that's why the Bank of Canada is going to hang on as long as they can, but they can't hang on forever. At some point, they're going to have to cut interest rates, and when they do, that pent-up demand is just going to springboard that real estate market, and I think a lot of property values are going to benefit from that. That's where I think it's going in the next little while.
Well, we know there's motivated vendors out there. There's people that want to get out of the real estate market, but there's not enough that the vendors aren't motivated enough that they're willing to drop their prices. Buyers are not willing to pay the price. So it's a little bit of a standoff, I guess you might say, is what is starting to shape up.
That's because, Patrick, also sorry to jump in there, but that's because, like, I was talking to one particular client right now. We're putting in a basement suite in her home to make it an income property. Smart move, by the way. You guys should look into this. But the reason we're doing this is so that she can qualify. And the reason we're doing this is because she can see the future and she understands, okay, I see what's coming. My mortgage renews in 2 years, and I need to be in a better position in 2 years from now. And Patrick, so far, the market hasn't had that much pressure. But in the next 2 years, essentially almost all mortgages will have turned over. Then it'll be a different game, because right now people have the luxury of saying, I'm in a really good mortgage position and I'm just going to wait. I'm just going to wait it out. I like my 1.8% mortgage rate. I'm just going to wait. I don't need to move right now. But eventually they won't have a choice, because they will get automatically renewed to the newer rates. And then they're going to have to make some new decisions. And I think that's all going to happen in the next 1 to 2 years. And then that's going to naturally force some of this market to come back to life. By then, I also expect interest rates to come back down.
Let's go talk a little bit about economy and interest rates and the importance of what the Bank of Canada may or may not do in July. You're saying a half, I'm thinking a quarter. They may hold. I mean, they may not do anything, let's face it. But there's a fundamental and of course, it's hard to trust the Bank of Canada. They made so many mistakes early on, and I keep going back to the day that Tiff Macklem looks into the camera and goes, we're not even thinking about raising rates, and where, it's go out and spend, borrow, and then didn't have the, I guess, foresight to kind of shut that down far earlier. Lots of politics around that. But let's just talk about that for a second. Here's the fundamental issue that we're going to bump into. We talk about lag. So as you pointed out, and we talked about many times on the show, is that interest rates and the lag and the effect of the lag of what's happening economically is a big deal. Great headline was around Canadian households are going to be reducing consumption. Now, why is that important for us to pay attention to? If the Bank of Canada doesn't decrease rates in some way that people can feel confident, what's going to happen? If your mortgage payment, let's say your mortgage payment, I mean, gosh, there's lots of $1 million mortgages out there, especially in Ontario and British Columbia, but even 800,000. And all of a sudden, over the next couple of years, that your mortgage payment's going to go up $1,000, $2,000, $3,000. Guess what? People are going to quit spending discretionary income because they don't have any left over. It's making a mortgage payment. So here's the fundamental, is that if they don't lower the rate, people are going to stop spending money, which is in fact going to decrease demand, which is in fact going to slow the economy even further. All to say is that this lag is just now hitting, and it's why what the doom and gloom part of me isn't all about doom. It is a little gloom, because I think we're going to see that slowdown catch up to us, and they're not going to lower rates fast enough, and we're going to go through the discomfort of a more definitive discretionary or definitive recessionary period.
I think you're right about that, Patrick, because if you can always count on the Bank of Canada for something, is they do too little too early and too much too late. That's a guarantee, because they can't time the market perfectly. And you're seeing that literally in play with this recession, which is they did too little too early, meaning they waited, bang, they raised it way too high too fast. And now they're going to wait and they're going to wait and they're going to wait. And I'm hoping for a half-point drop in July. You're hoping for a quarter-point drop, but I would not be surprised if they did something as stupid as raising interest rates, because they're going to wait and wait and wait until it's too late. Then they're going to cut aggressively, but the pain will already be felt by people. It's a guaranteed to happen.
So let me go back to what you call as doom and gloom. Here's the kind of, let's connect some dots for people, why that might even land this way. First and foremost, we know that our productivity GDP is record lows. In other words, we're just not producing goods. Short of Alberta in their manufacturing, and their productivity is off the charts, and we see that what's happening in that economy. By the way, though, Alberta's unemployment rate has really changed. It's shifted way up. It's like in Calgary, I want to say it's 8%. Again, based on the fact that they have all these people moving into the province and they just can't absorb all those people in terms of jobs. Having said all of that, when we look at the fact that our GDP, our actual true GDP in terms of productivity, is at record lows. When we look at the fact that the housing market is slowing down, and the reality is that much of our economy was driven by housing. What have we got left that's been driving the economy? Immigration. Well, now they're talking about, I don't think they're going to do it as much as they say they're going to, is cutting back on immigration. So if you look at that, then you consider the fact that interest rates are not coming down fast enough. The spread of mortgage payments, rent payments, for example, then you start to see people's discretionary income is going to be going to paying rent, going to pay mortgage costs. Things are going to slow down, JG, and that's why I'm kind of looking into the future going, this isn't going to be good over the next 12 months. I think there's going to be a lot of pain felt and some discomfort for many people given the scenario that's happening. And something I want to point out as well, the CPI data comes out, and I don't know how much you pay attention to it, but if you take off the cost of shelter, and even if you don't go that far, if you just take out the cost of the mortgage interest payment, which goes into CPI, do you know what the actual CPI rate is, JG?
No, what is it? I'm fascinated now.
1.6%. So we're hitting CPI numbers. The economy's cooled off. Things have slowed down. Given this benchmark CPI number, whatever you think about it, doesn't matter. It's literally, if you take off that interest mortgage, the interest payment or the interest portion of a mortgage payment, your CPI and shelter cost, your CPI drops to 1.6%. Why aren't they lowering rates dramatically?
It would be the smart thing to do is for them to lower rates in a couple of weeks by half point. We both agree on that. But we'll see how smart they really are, Patrick. I mean, this is it's definitely a good test, and we'll see. What are the economists saying, by the way? You follow way more economists than I do. What are the economists saying? What do they think is the consensus of what they're going to do?
Dude, this is, we're as good as any economist out there, because I can tell you right now, if you were to poll 10 economists, you would get probably a split of what they're going to do. There is no method to the madness. Everybody, you may as well just throw a dart against the board if you're trying to figure out what the Bank of Canada is going to do. I don't even think they know what they're going to do, but that's a different conversation.
So, Patrick, here's an interesting question for you. And I know I'm kind of, there's a bit of red meat here, I understand. But I just want to get so we're talking about all this. The Bank of Canada and their decision on interest rates has a lot to do with it. Immigration has a lot to do with it. We both agree with that. What the Bank of Canada is going to do is going to really bolster demand, which is going to really drive GDP if they do the right things. Immigration has been driving a lot of GDP. Now there's talk about slowing that down. But what's going to happen as the political landscape of Canada changes? I mean, there's pretty much a consensus that Poilievre is going to get in. I mean, I think if there's an election today, he would get in, no doubt. That's coming up in not too long. That's another 13, 14 months away, give or take. So my point is some of this is just going to have time to play out, and then we're going to have probably a change in leadership. and that's going to be interesting. How do you think that's all going to go? And what if it happens before? Because my gosh, there's a little bit of ripples in the Liberal camp I've been hearing in and amongst the ranks, if you will. So, what are your thoughts on all this?
Well, it's politics, so really, who knows? I think that the Liberal NDP, well, we'll call it the Liberal government, lost the longest standing riding in Ontario. I don't remember what it is, but that was a pivotal election loss. So in other words, for them to lose the seat in that particular riding apparently is a game changer. Having said that, when I look at politics and I look at the fact that we're still a year away from an election, a year plus away, there's a lot that can be done. I think that as much as we can be optimistic about a change, a party change, a leader change, I think that we got to be a little bit cautious, because unless the Liberal Party changes the leader, and that isn't about to happen by the looks of it, I don't know. I think that there's just as good a chance as I think people are going to get too confident. That's my fear of it, is they're going to get complacent and they're going to think everybody else is out voting. And then there's the point of it is that it's not done until it's done. And keep in mind one fundamental thing, JG, and that is that all of these immigrants that have come into the country are actually, many of them are very thankful to our government for allowing them into the country, providing the things and the benefits of them moving into Canada. So I think there's a very, very good chance that it won't be as big a landslide as people are anticipating. That's what I got to say about that.
You're saying Justin's creating his own votes by allowing immigration to happen? Is that what you're saying? We're probably going to get canceled for this. We're probably going to get censored, but let's talk about it anyways.
Well, I think there's, at the end of the day, when all you have to do is look at the conversation that they're having, so they're making vote buying policies. Now, it's not that I disagree with all their policies. Mostly I don't disagree with a lot of government policies. I just disagree with the cost and the implementation, if you will, the execution of such a thing, because none of it's always nonsensical. The point of it, in saying all of that, is that the policies that they're putting in place right now are really vote buying type policies. And one that comes to mind, because it's been in the headlines, is dental care. Now, do we need dental care subsidy? Perhaps, and many do. But that's one of the biggest platforms that they're basing. What do I want to say about that? They're spending a lot of time on those kinds of policies.
Listen to this. You're going to love this. I have several seniors in my life that now qualify for this dental care. And I'll tell you the trend I'm seeing across the board. This is a 100% trend on a small group, but still, nonetheless, 100%. They of course they get this dental care. They go to the dentist. Every dentist is recommending like complete jobs. Like, we got to take all this out. We got to remove all these fillings. We got to redo all this. Like, these bills for these dental cares are going to get nuts, and the dentists are making a killing on this stuff. I'm not saying it's not worth it. I'm not saying it's not legit, but I'm saying this is exactly the kind of thing that is very, very costly. And I'm not saying it shouldn't have happened, but my gosh, it's fascinating that what's happening is the recommendation by all these dentists, like, yeah, all of this is going to be redone. And I'm seeing these bills that the government's paying, and I'm like, holy crap, that is nuts. And it's very interesting, but more money going out the window.
Yeah, I don't know what the program is. I just, I haven't dug into it, and quite frankly, it's, again, I look at that and all it will do is piss me off. So it's not that people don't need dental care subsidy, but again, it's always, when it's government run, it's always overspend, undermanage, or overmanage and collapse it. That's just me. That's my there's my doom and gloom around government, but I'm pretty clear on that. I'm not shying away from, that's my attitude towards that.
You talked about an election in over a year, like about 14, 15 months for us here in Canada, but there is an election south of the border happening in just a couple months, like in 3 months.
Yep.
Now, could that have an effect on stuff too, Patrick? I mean, definitely,
Huge effect.
Yeah. So That's what I'm saying. So like, there's a lot going on in our world, and then there's like two major elections coming up here, which is really going to impact things. So the next 18 months are going to be quite fascinating. I mean, it's going to be a wild ride. Buckle up and let's get ready.
Well, as we sit here today, there's a very good chance that it's going to be Trump in that wins that election. The fundamental of that, whether that happens or not, either way, I think Biden's out, and depending on who steps in, we don't know. But the point is that from a Canadian perspective, Justin Trudeau is not respected by any Republican. And so if the US shifts to that Republican government, whoever that leader might be, or even in a Democratic where you get somebody so there is a chance that the Democrats may in fact look at Kennedy and go, I know you went back to being, you're running independent now. How about if you come back into the party? He has a chance of winning.
You think that's going to happen?
I don't know if it'll happen, but there's a chance that it could happen. And
Dude, I hope it does.
So do I. And if Kennedy gets in, well, then Justin is toast, and we'll have a problem, because the respect for Justin, his ability or inability to negotiate a deal. I mean, what his focus is on a leader of Canada is not good. And when we're the laughing stock of our biggest trading partner, they just want to take advantage. They're gonna walk all over him. So, anyways, I'm not optimistic about what that would lead to. A different conversation. Whereas somebody like Polyev is far more savvy, far more likable, really understands policy, can talk intelligently, and understands trade far more than Justin ever did or does. So I think, it'll be interesting to see how that unfolds as well.
Interesting to be sure.
Yeah.
All right, ladies and gentlemen, that wraps it up for another episode of Rein It In, episode number 43. Patrick, I think that was exciting. Thanks so much for being awesome. I can't wait till the next one.
And I think we solved some world problems. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.